Liquity, or the LQTY token, more than doubled in the last month. Where does this come from? It probably comes from short coverings. People were massively betting on this over here, the expanding supply of liquidity tokens. So the team got more and more tokens unlocked, making the circulating supply expand. Now, when supply expands and demand doesn't grow as quickly, the price of course goes down. And this is where people make money. If you go on a centralized exchange, such as Bybit or KuCoin or Gate.io, you can bet on a falling LQTY price. Now, why do you want to do this? You want to take advantage of this collapse over here. More than 95% of a drawdown in terms of US dollars. And so where does now this recent recovery come from? It comes from the short sellers closing their positions, taking profit. So this is how this works. When you're opening a short position on a falling liquidity price, then a centralized exchange is going to hedge itself to a degree. So they are going to sell some of the LQTY tokens in the process. Now, once the price goes down because of all the internal team selling their unlocked tokens and you're covering your short, then a centralized exchange is also going to do some moves on the spot market and is going to buy some. Now, why are those traders that bet on falling liquidity prices suddenly taking profit? It's again because of this chart. The supply isn't expanding that quickly anymore, and it's going to level off relatively soon. And so you want to be the trader that covers the short first, right? Because if you're currently betting on falling prices and other short sellers are covering before you, then the price has already risen and you don't want to see rising prices when you're betting on falling prices. So it's a bit of a player versus player game. People are basically participating in a game of musical chairs to a degree. And so we are seeing now the liquidity price stabilizing, right? That was the bottom at the beginning of the year. And even relative to Ethereum or relative to Bitcoin, that floor is very, very stable. Now, what can we learn from this? First, it does make sense to always look at token unlocks. If there is an expanding supply, you want to be careful with buying the token. You rather want to potentially bet on falling prices. Second though, when you do bet on falling prices, still look at the current momentum. Because once momentum shifts around and the short sellers are covering, you want to be out as well. So you have to monitor the current momentum a lot. To quantify that momentum, where currently the trend is going, I like to do back tests. I like to use moving averages and I like to find out what's the best moving average. And the back test I've done for liquidity starts in April of 2021, goes all the way to today. And the strategy is straightforward, right? We want to bet on rising prices whenever the price is above the moving average, and we want to bet on falling prices whenever it's below. And we want to find out what's the best moving average duration. Is it the 100-day? Or the 50-day, or maybe the 25-day, right? What's the best moving average, at least historically speaking? That's why I've got this Excel sheet, and here we've got the results. So I've backtested the best simple moving average, the best exponential moving average. Those are daily data points. So we're looking, for example, here at the 47-day exponential moving average, or over here at the 54-day simple moving average, and those outperformed buying and holding quite a bit, right? We even have trading fees in here, 0.2% for every trade. This is the same result, but displayed slightly differently. On the x-axis, the duration of the moving average in days. On the y-axis, the annualized performance. The best exponential moving average in red is the 47-day. The best simple moving average is the 54-day. There's another good exponential moving average, the 107-day. So 54-day simple moving average, that's over here. 107-day exponential moving average over here in red. That's historically what worked the best for liquidity. In other words, if you're currently in the asset, it might make a lot of sense to look at those, because historically those two lines distinguished bull and bear quite well. How well we can see over here. So in white we've got the liquidity price, in turquoise we've got the back tested return. This is the same graph but on a logarithmic scale. So note how we make money here even though liquidity is going down, because we're betting here on falling prices. We also make money when liquidity is going up, because here we are betting on rising prices. We're simply just timing this. Here the same for the exponential moving average. So the 107, also a very nice constant outperformance. So we have to take those signals seriously. If you look at statistics, if you look at the numbers, that's what distinguishes bull and bear. And especially given that now the impact on the expanding circulating supply gets lower, the current momentum is probably even more important in the future. Buying at this very moment might be a bit risky because we are already quite a bit above the moving averages, above the EMA, it's 32%, above the SMA, it's 38%. So even if we dropped now all the way to say $1.10 or so, we'd still be bullish according to this backtest. So we've run quite hot. We've even seen fake outs in the past. This is a pretty risky proposition to just jump in right now. But at least the positive here is that the supply isn't expanding that quickly anymore, reducing the sell pressure. That being said, there are still two red flags to be aware of. The first one is that the market cap of the minted LUSD stablecoin is rather on a decline. It went from 750 million roughly to currently 240 million. And that's the main use case of the entire platform, right? You deposit your ETH and you mint the LUSD stablecoin against this. The total value locked on the Liquity platform is rather declining. And it's not just measured in US dollars, it's also measured in ETH, right? There's no real growth here. So the stablecoin is somewhat stable. It doesn't depack too much. It doesn't go suddenly to 70 cents or whatever. The mechanisms work, but the demand isn't expanding, but so isn't the supply. It's a relatively dormant project as of now. I see this current rally simply just being profit taking by short sellers. And so I personally don't jump in, but feel free to join our Telegram. Link is down below.